Hi, this is Jorge Ospino, and today we're going to be looking at a case analysis on segment reporting. This is for MBA 691 HP class. So here's some points on segmented income statements and the contribution approach. So most larger businesses produce several different types of products or services that are often spread out amongst multiple divisions. They may also have multiple profit and cost centers that are based in different locations. It is important for a company to have the ability to analyze the profitability and performance of each individual segment of the business in order to make informed decisions related to each specific segment. Segmented income statements are useful for a couple different reasons. One for analyzing the profitability of the segment, for making decisions, regarding the segment, and for measuring the performance of the segment managers themselves. These income statements are also useful because they differentiate traceable fixed costs from common fixed costs. So traceable obviously are costs that are traced directly to the segment, costs that they're responsible for, where common fixed costs are not necessarily traceable to that particular segment. The segment margin is important. That's obtained by deducting the traceable fixed costs of a segment from the segment's contribution margin. That margin represents the margin available after a segment has covered all of its own costs. It is the best gauge of the long-run profitability of a segment because it includes only those costs that are caused by that particular segment. So now we're going to analyze a case involving a service organization and the performance and profitability of its different business segments to demonstrate the usefulness of these segment income statements that we've been talking about. So this particular case involves an association called Music Teachers Incorporated, and it is an educational association for music teachers that has approximately 20,000 members. Now the association operates from a central headquarters, but they have local membership chapters throughout the country. Monthly meetings are held by the local chapters to discuss recent developments on topics of interest to music teachers. The association's journal, Teachers Forum, is issued monthly with features about recent developments in the field. The association also publishes books and reports and also sponsors professional courses that qualify for continuing professional education credit. All right, so here we're going to take a look at the statement of revenues and expenses for the year ending November 30th for Music Teachers Incorporated. We see the total revenue was $3,275,000. The expenses came up to $3,144,000, and the excess of revenue over expenses was $131,000. So we're going to use a lot of this data here, especially regarding each individual expense, to create the segmented income statement. Okay, so the board of directors of this association is requesting a segmented income statement to show the contribution of each segment. They have 4 segments: membership, magazine subscriptions, books and reports, and continuing education. They have some data here. Membership dues are $100 per year. $20 is considered to cover a 1-year subscription to the journal. So that $20 is going to be assigned to the magazine subscription division. So we'll look at that here on the next one of the next slides. Here it tells us some data that the 1-year subscriptions to the journal were sold to non-members and libraries at $30 per subscription. 2,500 of these subscriptions were sold. 100,000 in advertising revenue was taken in. Costs were $7 for printing and paper and $4 for postage and shipping per magazine subscription. 28,000 technical reports and professional texts were sold by the books and reports division, $25 per report, $4 for printing and paper, $2 for postage and shipping for the average cost per publication. The association offers a couple different courses for continuing education and members and non-members alike. The one-day courses were $75 each, attended by 2,400 students, and the two-day courses were $125 for each student. 1,760 students attended those classes. Okay, so here we see some data regarding the salary costs for each division, and then the space occupied by each division. So we can kind of take a look at that there. I know the total here for salaries for the year was 920,000. Total space occupied was 10,000 square feet. Gives us some info on how the personnel costs are calculated. Gives us the occupancy costs. It tells us it includes a $50,000 rental for a warehouse used by the Books and Reports division for storage purposes. So important data that we'll use in a few here. Now, data here shows that printing and paper costs, other than for magazine subscriptions and for books and reports, relate to the continuing education division. General and administrative expenses include costs relating to overall administration of the association as a whole. The company's corporate staff does some mailing of the materials for general administrative purposes. Now, the expenses that can be traced or assigned to the corporate staff, as well as any other expenses that are not traceable to segments, are going to be treated as common costs. Now, it is not necessary to distinguish between variable and fixed costs for this statement. So we're asked to do two things here. The first thing is we're asked to prepare a contribution format segmented income statement for Music Teachers Incorporated. This statement should show the segment margin for each division as well as results for the association as a whole. And then the second part of it is we're going to give arguments for and against allocating all costs of the association to the four divisions. So here we're going to break it down a little bit. First part we're looking at is the revenue portion of the income statement. So it appears as follows. So it looks like we have membership dues total for the association total. It's going to be $2 million. Now we do want to, how we got that was earlier in the slides I mentioned they had 20,000 members and the annual due was $100 per member. So that's how we got $2 million for association total membership dues. Now we're going to break that up some, because they did mention that $20 of each $100 membership due should be applied to magazine subscriptions. So if we start with the membership division, we'll take $80 of that $100 membership due and multiply that by the 20,000 members. So that's going to give us $1.6 million. That's the figure we have under the membership division. And then the $20 that's remaining out of the $100 membership due, we're going to multiply that by the 20,000 members, and that's how we're getting the $400,000 that's under the magazine and subscriptions division. Now we're going to take a look at non-member subscriptions. So those are pointed out in here as being $75,000. So that's going to go under the magazine subscriptions division as well. Now we got that information from our data earlier, which stated that the one-year subscriptions to the Teachers Forum Journal were sold to non-members at $30 per subscription, and there were a total of 2,500 of these subscriptions sold. So 2,500 times 30, that's how we get the 75,000 for non-member subscriptions. Next, we're going to look at advertising revenue. So it tells us in the data that the magazine generated 100,000 in advertising revenues. So we're going to apply that to the column related to magazine subscriptions as well. Next, it talks about the technical reports and the professional text. So it had mentioned that a total of 28,000 technical reports and professional texts were sold by the Book and Reports division at an average unit selling price of $25. So if we take that $25, multiply it by the 28,000, That's how we come up with the 700,000 that we're going to put, and we're going to put it under the Books and Reports division column, as well as the association total, of course. So then we're going to move on to the two different courses that are offered. So the one-day continuing education courses, the data mentioned that the cost is $75 each, and it was attended by 2,400 students. So if we multiply those two figures, we get 180,000. That will put allocate to the continuing education division. For the two-day continuing education courses, the data mentioned that it was $125 per student, and there were 1,760 students that attended the two-day course. So if we multiply those two figures together, that's how we come up with the 220,000 that we're going to put under the continuing education division column as well. So that's going to take us down to total revenue. So total for the association as a whole is going to be $3,275,000. For the membership division, it's going to be $1,600,000. For the magazine and subscriptions division, it's going to be $575,000. For the books and reports division, it's going to be $700,000. And finally, for the continuing education division, we're looking at total revenue of $400,000. All right, so next we're going to look at the traceable expenses to particular segments and to the division segment margins. So for salaries, we know that 840,000 of the 920,000 total for the year that was spent on salaries is traceable to specific segments. So based on the earlier data, we know 210,000 was the salary cost for membership division, 150,000 for magazine subscription, 300,000 for books and reports, and 180,000 for continuing education. Now personnel costs, there were $210,000 in costs that were traceable to particular segments. So based on the earlier data, we know that personnel costs are calculated by taking 25% of the division's salary costs. So if we do that for membership division, 25% of the 210,000 for salaries was 52,500. Same with magazine subscriptions, 25% of 150,000 was 37,500. And so on. For books and reports, 75,000, and continuing education, 45,000. Now the occupancy costs, we know based on the earlier data that we had 280,000 in occupancy costs. We're going to put the 50,000 that was used for storage rental for the books and reports division on a separate line. That's going to leave us with 230,000. That's what we're going to use for these calculations. You see 207,000 up there because the other 23,000 is not traceable to these divisions. We'll look at that in the next slide. So basically how we calculate this is we use the ratio. 2,000 square feet was occupied by membership, 2,000 by magazine, 3,000 square feet by books and reports, and continuing education occupied 2,000 square feet. So that's 2,232. So if we take membership, they're 2,000 square feet, so basically 20% of the $230,000 cost for occupancy. That would be 46,000. Magazine subscriptions also had 2,000 square feet that they occupy, so also 20% of the 230,000. That's another 46,000. Books and reports had 3,000 square feet that they occupy, so that's going to be 30% of the 230,000. So that's how we got the 69,000. And then continuing education, again, 2,000 square feet, so 20% of the 230,000, which is 46,000. Then we're going to move on to that storage rental that the data tells us is used for storage purposes for the books and reports division. That was 50,000, so that one's pretty straightforward. Then we have reimbursement of membership costs to local chapters, 600,000. That's going to go to the membership division. Other membership services, 500,000. Obviously, we'll apply that to membership division as well. Printing and paper. So we know that there was a total cost of 320,000 for the year. We know for the magazine subscriptions division, they mentioned there were a total of 2,500 subscriptions, and the magazine's where the costs were $7 for printing and paper per magazine subscription. So if we take that $2,500 and multiply it by the $7, that's how we come up with that $17,500 under magazine subscription division. For books and reports, we know that there were 28,000 reports and texts that were sold for the year, and it tells us that the average cost per publication was $4 for printing and paper. So if we multiply the 28,000 and the $4, that's how we come up with the $112,000 for books and reports under printing and paper. And then it tells us that printing and paper costs other than for magazine subscriptions and for books and reports are going to relate to the continuing education department. So we note to put the balance of that amount in that column. And then for postage and shipping. So it tells us here for postage and shipping, we have a traceable amount of $66,000. For the magazine subscription, it tells the division, it tells us that $4 was spent for postage and shipping for each magazine. So if we do the $4 times the 2,500 subscriptions, that's how we come up with the $10,000 there. For books and reports, it tells us there was a cost of $2 per postage for postage and shipping, and there were 28,000 reports. So if we multiply those two, that's how we get the 56,000 under books and reports. For the instructors' fees, that's pretty straightforward, 80,000. Obviously, the instructors are going to work under the continuing education division, teaching those courses. So we're going to put the 80,000 there. So that's going to leave us with a total traceable expenses for the association as a whole, $2,873,000. For the membership division, it was $1,408,500. For magazine subscriptions, it was $261,000. For books and reports, it was $662,000. Continuing education was $541,500. Now the division segment margin for each segment. So for as a whole, the margin was $402,000. For the membership division, it was $191,500. For the magazine subscription division, it was $314,000. For books and reports, it was $38,000. And now for continuing education, there was a loss there. It was a negative $141,500. Now here we're going to look at the untraceable common expenses. So these we could not trace to a specific segment. So for the corporate staff salaries, we know the data mentioned that there was $80,000 that we can put there. Personnel costs, again, the data told us that's 25% of the salaries. So we know 25% of the 80,000 for the untraceable common expenses. For corporate staff is 20,000. So that's how we got that for personnel. Occupancy costs, as we talked about earlier, based on the amount of square feet that the corporate staff takes up, it's 1,000 square feet. So we're going to take 10% of that 230,000 total that we talked about earlier for occupancy. So that's how we get the 23,000. Postage and shipping, I mentioned earlier that the corporate office does some mailing of materials for general administrative purposes. So this was the amount remaining from the total postage and shipping that we couldn't account for earlier. So the balance went here, 110,000. And then it tells us in the book also general administrative was 38,000. It told us that in the original income statement or revenue and expenses statement. So the total common expenses were $271,000. Now this is the final part of the contribution format segmented income statement, which is going to show the excess of revenues. So the total revenue was $3,275,000. The traceable expenses to segments were $2,873,000, and the total common expenses were $271,000. So if we multiply those expenses from the revenue, we end up with an excess of revenues of $131,000, which matches the revenue and expenses statement from the beginning of the problem. Now it also asks us to give arguments for and against allocating all costs of the association to the four divisions. So for allocating all costs to the association's four divisions, I really could only think of one thing that would really make sense there. And I would think that they would do that just to make the division managers aware of the common costs and make them aware that those costs need to be covered. Now, for against allocating all costs of the association to the 4 divisions. So it's a couple things. First, the segment may in fact be profitable, but because of the common cost allocation, again, those costs are not related to that particular segment, it may falsely appear as an underperforming segment. Then we have segment managers are being held responsible for costs they can't control when they have these common costs allocated to them. And then lastly, we have basically it's arbitrarily assigning costs to segments where there is no relationship between the two. Again, these costs are not, these segments are not responsible for these costs. It has nothing to do with, their work and what their production there and what they do. So that's going to be it. That's going to be case study 630. Thank you.